All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall, I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk, a virtual trading floor. Before we get into any market-related discussions, here is a quick a disclosure of Derrick's current positions as of our recording here today. Again, he is the head trader at T3 Trading Group. So just for disclosure purposes. We're just looking for a market update from a professional trader here today, Derrick. Lots going on after Friday, the weekend, and then today, this Monday. So first off, how is your trading day going so far?
It's going okay. I mean, I'm pretty short, so I did really well on Friday, obviously, and then the market's gapping up today, so giving back some of those gains, which is part of how it works. We had hit extreme oversold territory as we were getting into Friday's low, so which is basically where we closed. So not surprising at all to see that the market is bounced back a little bit today. Especially given the fact that Trump has kind of already reversed course on what he said that brought the market down. But I mean, that was kind of obvious that was going to happen, right? I think that everybody knew that. So the big question that I was asking myself, even as we were moving down on Friday, that I'm still asking myself right now, is what has changed? The answer to that is absolutely nothing. Absolutely nothing changed. Friday. Nothing changed on Friday. Trump came out and said that maybe on November 1st, they'll put 100% tariffs on China. This has been the same rhetoric that we have been seeing for, since February, since March, and nothing has ever happened. So I don't know why the market would think that all of a sudden, when Trump says he's going to put 100% tariffs on China starting on November 1st, and November 1st is 3 weeks away, that he's actually going to end up doing that by the time November 1st has occurred. The track record of there being follow through on those types of announcements when he gives himself time is zero. And, then when, Trump came out and basically said the exact same thing, I think he tweeted, November 1st is an eternity to me. It's like, yeah, obviously that's what we all knew. So if you're asking yourself what has changed between Thursday or Wednesday of last week, when Wednesday we had an all-time high close, versus Friday when we had a large sell down day, versus today where we're retracing some of Friday's move, the answer is absolutely nothing. But that's not what's actually important. What's important was what he said was enough of a catalyst to trigger systematic selling on Friday. That's what's actually important. And it did it in an environment where the corporate buyback bid is not really currently ongoing. And there is still positive gamma, but positive gamma had been reduced. So we're just still in a little bit of like a window of opportunity for the market to go down. The interesting part about Friday's move, based on all the statistics that I've read over the weekend and the research I did this morning, for anybody who likes to follow flow of funds information, which is a big thing that I look at and I think has become really key to success in trading at this point, is that even at Friday's low, we were only actually starting to begin to get to the point where larger systematic selling could actually trigger. So anywhere between like SPX 6580 through like 6500 is like the golden zone. Like as you can be breaching through that, like 6580 through 6500, you can begin to trigger things. And if this market can never get below 6500, then you probably have a really big problem, and it would probably coincide with the VIX that's getting above 25, and a VIX above 25 should probably accelerate further to the upside. So honestly, the question at this point is, was the selling enough to create enough forced selling at this point where even after Trump has already tacoed out on Sunday, that this market could get back down to Friday's low and even a little bit below Friday's low, which is where SPX 6500 is? If the answer is yes, we can get back down to those levels, then we probably will go much lower. And if the answer is no, then there's a good chance that we kind of go back right into the same price action regime that we've been in for a long time now, which is just kind of a grind up with reduced realized volatility. But Friday we didn't actually see much of a positioning unwind at all. But it brought us to the tip of the iceberg. Can we crash into the tip of the iceberg is the question. I think that there's a possibility that it could happen. Even today with the S&P being up 1.6% right now, that actually will force some selling from the realized volatility community that gauges their exposure based on realized vol. And realized vol had gotten like historically low at the end of last week before this movement hit. I think it was one of the biggest catch-ups that realized vol has played to implied vol or whatever in a really long time. We'll see what happens here. For the moment, I like the idea of looking to short this initial move higher, but as we're speaking right now, there's no signal to actually do so. So that's what I'm looking at. We had a little bit of a signal, I thought, with the lower high that took place at 10:35, 10:40 a.m. this morning, which I called a short out from. But now that we're above that high, I think that you are in a little bit of wait and see mode until this market can give a signal. But I'm not buying this gap up either.
Last time you and I talked, we were, of course, in that state of market could not go down, could not get any red days. We were hoping for a red day. Got a couple last week, I think. Like what, two red days before Friday's big red day. Did that help out with any positioning for you in this market, or any of the charts being able to have some levels to go off of after we got some, down moves and changes versus just the constant grind higher?
Yeah, I mean, it was honestly still a constant grind higher. We had 2 down 0.3% days. Like we were down 0.3% on Tuesday, then we made a new all-time high on Wednesday. We were down, I think, 0.3% or 0.25% on Thursday, and then Friday morning before the announcement actually hit, we were almost back at all-time highs again. So there wasn't really anything to derive from that price action in the beginning of the week. Outside of kind of the usual, just been the steady grind higher. And then what we've been waiting for has been any sort of a vol catalyst that could actually create forced selling. Friday was the beginning of it, but like I said, the market's gone up so far that the degree of the selling on Friday really actually only brought you to like the beginning potential part of where the selling could come in. So again, that's what you need to pay attention to is Friday's low at this point, and honestly Friday's high. If Friday's high were to get negated, you are back into 100% full-on bull mode. Right now we're having an inside day, so the inside day provides some value actually for both bulls and bears because it tightens things up a little bit. If you get an inside and down, meaning today's low breaks tomorrow, then you're probably going to get a retest of those important areas I'm talking about. But if you get an inside and up, so Friday's daily chart candle is what I call a penalty box candle, sometimes called a day to take notice of. It's basically a red, which I refer to as a negative Maribozu engulfing candlestick. Those candles rarely get negated in one day. So it's very rare that you see any sort of a large sell-off like we actually saw on Friday with that big red candle where you close on lows, and then the very next trading session you're breaking above that high. That's a very rare situation on any time frame. That's not to say that big red Maribozu candle can't get negated. It would be negated if the price got back above that high. But there's typically one of two ways in which that negation would occur. One is you get further follow through to the downside on the next trading session with a big downside tail. That big downside tail then actually leads the market to go back up and retrace the negative Maribozu and eventually break its high. Or two is with an inside day and an inside and up. So potentially we're getting that inside day here, but I would describe that inside day as neutral. What matters is going to be tomorrow which way that inside day breaks. The inside day breaks to the upside, then you're probably working your way back towards that all-time high again and probably going to get there relatively quickly. If the inside day breaks down, then like I said, we're probably going to be retesting these really important potential sell trigger areas that we were just getting into on Friday at the low.
When it came to Friday, it was a big down day, but a down 2%, 3%. And we saw, or I saw at least, tons of people on Twitter talking about how one down day had just totally wrecked them, ruined their career, etc. And there's lots of talk about leverage and margin and all of those things in a market that couldn't stop going up, and then you get one really big down day and a lot of people get wrecked. What are some of the lessons you think more inexperienced traders can learn from a day like Friday and apply it to their future trading to not have such dire effects from one down day?
Yeah, it seemed I saw a lot of that too, mostly in the crypto space. It mostly seemed like a lot of crypto people who are, retail crypto traders who probably have access to too much leverage without knowing what they're doing with it because it's completely, an unregulated space, got blown up in one day. There is no possible way that if you've been long the market and you have caught this uptrend, which has just been one of the strongest uptrends I've ever seen, that you have an account that's at zero after one down day. That literally should not be possible. It only means that you are someone who chases price and that you're leveraged to the hilt. So leverage, and that's actually one of the biggest benefits of working with a proprietary trading company like T3 is the leverage that we're able to provide. But leverage is a double-edged sword. Leverage has the capacity to make you a lot of money in a short period of time. It can put you in really good risk-reward setups. It can enable you to implement certain types of strategies that might not be possible to implement otherwise. But risk management also means that, leverage also means that if you're going in with heavy leverage and you don't have a game plan in place for risk management, it's a phenomenal way to lose a lot of money in a short period of time. So the key to success in the trading business, even if you're just in a cash account, but the more leverage you have, the more this becomes the truth, is your risk management. The number one reason why people do not become successful as traders is because of a failure to manage risk and manage money over time. That's the number one reason, repeated constantly. And when you've got leverage on and you just think, okay, I can just ride the market up forever and we never pull back more than 0.3%. So I should be at, 100x leverage and never ever reduce that. It's just going to be a matter of time before you actually blow up. So yeah, that's a big part of trading. You need to know how to manage risk.
When it came to Friday, you had a lot of shorts on over the past few weeks when the market was just continuing to go higher and higher. I assume many of those shorts probably worked out for you on a Friday, on a day like Friday. So when it comes to taking profits, managing those positions when they work out, how did you navigate the day on
Friday? Friday was the second best day of my career, so that's always something to get that. I've been looking for this down move for a while. Definitely giving back a percentage of it today, though. The key to how you manage that and stay level-headed, whether your P&L is very negative or very positive, is to have good game plans and consistently follow them. I really think that is the key to success. So I tell traders on my team this following series of statements all the time, but I always think it's worth repeating. And it's something that anybody who's newer in the business really wants to ingrain in their head. The goal of being a trader is to be what we call consistently profitable. That's the goal. No one makes money in every day or every trade. The goal is to be consistently profitable and make money in the long run. The only way that you can be consistently profitable in trading is to be consistent in regards to your actions to the market. If you're doing different things all willy-nilly and different strategies every other day, there's not going to be any consistency there. You will not become a consistently profitable trader. The only way that you can be consistent in regards to your actions to the market is if you have rules that govern everything that you do for every situation that you might find yourself in. Those rules are then manifested in the game plan that you take for any trade. So any trade that you take should have a game plan. That the game plan is based on your rules that formulate your edge in trading that make you consistently profitable. But that game plan should include how you enter positions, how you exit positions for a loss in terms of risk management, how you how you exit positions for a gain in terms of reward maximization. So, for me, if I'm having a really good day like I did on Friday, or not as good day, I'm just heavily reliant on those game plans. I don't want to let the exuberance of a good day cause me to then start making mistakes. We call it being profit drunk. And I don't want to allow, a bad day where I could get in my own head because my P&L doesn't look good to, compound mistakes. So what I become very, very reliant on, especially on those really good and really bad days, is the preset game plans that I've already developed, because those game plans are actually what creates the consistency. It's what keeps me level-headed over time, and it's what can enable me to be a consistently profitable trader.
All right. Last time we talked, OpenAI and AMD had just announced their big partnership. Today, it's OpenAI and Broadcom. So OpenAI now has, announcing massive commitments with NVIDIA, Oracle, AMD, and now Broadcom being the next AI chip maker. What's your thoughts on this latest move in the AI/chip maker space and what it means for Broadcom as a stock?
Sure. I mean, another day, another AI deal.
Yeah.
AI is the entirety of the stock market. It's the vast majority of the stock market gains for this calendar year can be attributed to names within the AI space. And it seems like we literally get an AI deal every single day. Can OpenAI even follow through with these commitments that it's made to all these different companies? At this point, that's very questionable. It seems like they lose a tremendous amount of money, so they're going to have to raise a tremendous amount of money to be able to follow through on any of the spend that they're discussing. For the moment, the market upticks on every AI deal. I think at some point that's going to change. I can't time that, though. There's no way that I can time that. But you need to pay attention if you're a trader, because like I just said, AI is the entirety of the stock market right now. You need to pay attention to, does a time come when the next AVGO, OpenAI news hits, or whatever the next deal is, where those stocks don't go up in the way that they had been previously, and the market just getting tired of it? Because that, I think, could be the real signal for the end. It's like one of my favorite signals in trading, just generally speaking, is when a market can't continue to move higher on good news or can't continue to move lower on bad news. That's time to come the other way. So obviously, AVGO being up 10.5% as we're having this conversation means that time is not yet. They are still buying these things up when they are announcing deals, even with everyone talking about how it's a bubble and there's circular financing and all this stuff. Everybody says it's a bubble, so go buy it. That still seems to be where we're at. I'm of the thought process also that it's a bubble. And similar to what Jeff Bezos said, I don't think that's necessarily a bad thing. This is part of the process of new technologies coming online. We saw the same thing with the internet bubble and the .com bubble. When it actually burst, the internet still became everything that anyone could have ever thought that it would have been back in 99 and 2000. But those companies, many of them, they don't exist today, and they got destroyed. So, for me, when it comes to the AI trade, it's not a question of, is AI going to revolutionize the world? The answer is undoubtedly yes. It's already having a large impact on my life. I would say 80% of the time when I would previously Google something, I am now using an AI. Typically, I use Perplexity. I think Perplexity is great for anything that is finance related. And it's just so much better, and it's so much more efficient. The new Sora 2, what they're able to do in that space now, I think is going to revolutionize advertising. I think it's going to revolutionize the way that Hollywood does business. So all of this AI is going to create a lot of symmetries for business. The question is, will it create symmetries at the trillions of dollars worth of spend that's currently going into it? And honestly, my current thought process is no. I don't see how it's possible with that degree of spend that it's going to be able to catch up to it. And currently, everything I'm using, I'm getting 100% for free. I'm messing around making videos on Sora. I'm using Perplexity to ask questions for market related research. And I'm not paying a penny for that. And it's all coming at a loss to these companies. I saw that every time I make one of those fun little AI videos on Sora, that OpenAI loses between $1 and $3. And that's just 100% a bleed out. They don't care, though. They care about the growth. But at a certain point, it circles back to what we saw with Meta and the metaverse. At a certain point, does the market start to just get tired of all of the spend, all of the circular financing without the revenue really coming in to back it up? I almost describe Sora as like an NFT moment. Maybe I'm not exactly comparing apples to apples here. And again, I do think that like a Sora is going to benefit advertising and Hollywood, but like, to me, this is just like a I don't know, it's worthless. It's just like a fun little thing that I could play around with to send like a stupid video to my friends in the same way I might send them like a Bitmoji or something like that. It's all the same thing, but at just a massive cost, and a massive cost of power also, which is a bit of a problem. So again, to circle back on what I'm looking for is, when do we get the OpenAI deal with whatever company, and that company isn't able to go up on that news? Then it shows you that we're just tired of this, and then I don't think you want to be long any of those names. But right now, we are still seeing that they're buying it up on it.
Mm-hmm. I've made that same meta and the metaverse analogy a lot in talking about AI and this market, and that's kind of the what to watch is, like you said, when they stop getting rewarded for spending so much money on AI. It's definitely a signal for this market. All right, I have to ask you about earnings season, because the official, quote unquote, official start is tomorrow morning. JP Morgan Chase, Wells Fargo, Goldman Sachs, Citigroup. Those are your big banks reporting in the morning ahead of the open. Wednesday, we'll get Bank of America, Morgan Stanley. And then some others peppered in there, like United Airlines is this week, Johnson & Johnson tomorrow morning, et cetera. But, our typical kind of slow start with the financials being the focus. Any of the financial names, are you looking at any of those for any earnings plays, looking at the charts, and then overall earnings expectations for this Q3 earnings season?
So the financials are going to be a little bit interesting. If you see some of these companies that I think like Jamie Dimon has referred to in the past, like shadow banking companies, like a OWL as an example, or I'm trying to remember the Ares symbol, ARES, or even if you look at like Jefferies, Jefferies Financial Group, symbol JEF. These stocks have been getting absolutely destroyed. Some of that is related to their exposure to, I can't remember the name of the company, First something, that was doing the shady car loans that imploded. So some of that I think is related to that exposure. The question when it comes to the banks is that contagion something that can spread further beyond these handful of companies that seem to be more exposed to, like, I mean, you've seen all these statistics come out, and this gets into a completely different topic of the two economies that are ongoing right now. You have the AI economy, and you kind of have the everybody else economy, and the everybody else economy is doing very poorly. But if anything, the AI economy is actually masking it in many ways because people have a positive wealth effect, so they're continuing to spend. So it's making it so that the regular economy doesn't look as bad as it actually is. But you're starting to see things like, there was a stat out, I think, a week ago that showed that credit scores in the United States just had their biggest dive on average in 20 years or whatever the number was. You're seeing car loan repayments kind of fall off, and that led to the implosion of that scam company that's bringing down these Jefferies type names. I saw chatter on Friday that Carvana might have some exposure to some bad loans, and Carvana was particularly weak on Friday, and it's not really it's up 2% today, but it's not really snapping back nearly as well as the market is. The question is, can you get any contagion on that type of stuff into the big banks? And honestly, my general thought process is no. I think that the banks are going to be fine, the big ones, JP Morgan's, Bank of America's of the world. But it'll be interesting to see what their reports are. The banks are always a little bit of a slow start to earnings season also. Keep an eye on XLF. XLF just broke down through 53. So recapturing 53 would be important for it. It's still below that right now. And 54 is the breakout level. So we'll see how those reports look.
All right. And then in this market, we got a big down day on Friday. We're getting a big bounce back today. Any charts that you are looking at as a trader that interest you for trades? And we can pull up charts if you want, but if there's not any particular, then.
Yeah, I mean, I'm just super macro focused with at the index level, which is what we discussed. So you're getting the inside day build out today. Do we get an inside and up that gets this market back up? Do we get the inside and down that gets this market back down to Friday's low? Sitting around Friday's low and a little bit below it are some very, very key systematic triggers that could lead to significantly more selling if we can actually hit those levels. So, and I think everything that you do is based off of that. Probably any name that you're looking at right now is going to move based on the answer to that question of the index level, with the exception of the other one that's just really interesting, just continues to be some of these meme stocks that are incredibly unstoppable. I'm looking at RGTI up another 18% right now as we're having this conversation. Or you got like the rare earth stocks, this USAR is up 23% on the day, or Quad U is up 20% on the day. I mean, these companies barely have businesses, no revenue companies that barely have businesses that are up like hundreds of percents here. So that's just the other side of the market that is worth watching. And honestly, one of the biggest bull takes that I was making on Friday was that those names weren't down enough. Like when you really hit the market down the way you did on Friday, there's a real unwinding of risk. Then these meme stocks that are up hundreds of percent should have been down 20% plus on Friday. And it almost seemed like they were forced down a little bit because of the market when they wanted to be higher. And then it's no surprise then to see that a lot of them are actually already well above Friday's high, which is pretty incredible. And it shows that the bull sentiment is still very, very much here, especially in the retail space. Friday was not enough to hit retail down at all. I think we're still seeing record call buying volume coming in on Friday, and it's probably continuing through today.
One thing I didn't ask you about, we are entering week 3 of government shutdown. Market doesn't really seem to care. And the market doesn't like uncertainty. That's like, we know that. Markets like certainty, not uncertainty, etc. We're missing a ton of economic data at this point. We didn't get a jobs report. We didn't get a bunch of numbers last week. We're probably not going to get a PPI this week. The CPI has been moved to next Friday to hopefully maybe the government will be open and we'll get it. Housing market data this week is probably not happening, etc. So we'll get a flush of data when the government eventually reopens. Do you feel like the market is just operating from the standpoint of, well, eventually it'll reopen and it's not that big of a deal? All these other things are happening, these AI deals, Trump's tweets about China, that's what we need to focus on. And the government shutdown is just there.
Yeah, I think that the market's actually just gotten a lot smarter than it ever was previously. There used to be things that hit the market down that don't hit the market down anymore. There used to be this is a perfect example of it, right? All the data shows that when you get a government shutdown, you lose GDP up front, you gain it out back. And all the trading data had historically showed until this time around that you like sell off into the government shutdown and then you stabilize as the government shuts down and you get bought back up after the government reopens. And market participants at this point are like, well, why do I even bother selling when this news is irrelevant because it doesn't actually hurt GDP and everything's going to go right back up anyway. So now you don't even get the sell portion of it. But the question is there a time, an amount of time where the government being shut down actually does begin to have a real world economic impact that you don't just get back in the following quarter? And I've seen various conflicting research about it, to be honest. I've seen some things say that once you get past the 2-week point, that it actually starts to have some degree of more irreparable damage on the economy. I've seen other stats that say you have to go as far as a month. So we're only around that 2-week point now. So we were only starting to get to the point right now where you would expect maybe the market might begin to care about this, but it's still very early game on that. And obviously what we're visibly seeing is that the market still at this point does not care.
Sorry, I was muted. All right. Derrick is a real trader. I want to let him get back to it because obviously lots happening in this market. If you'd like to get his free ebook about prop trading, the benefits of prop trading, and how you can work with Derrick himself and the team, you can go to t3live.com/DO live. Again, that's a totally free ebook written by Derrick. t3live.com/DO live. Derrick, have a great rest of your trading week. I hope you get some more excitement. I gave you that last week as we left. I hope you get some down days and some excitement, and you got it. So maybe it'll happen this week as well. Have a good one, and we'll talk next week.
Appreciate it, Greta. See you next time.
All right, bye.